where I'll try and do a case study kind of an approach. If you guys are interested, you can just sign up for the newsletter, and I'll post the date and time for the same once I'm ready. So I'm open to questions now.
That would be great, Prabhakar, and it was really insightful last half an hour. So Prabhakar, it's like, so Shashank, you have any query first, or shall I go first?
Yeah, you go ahead.
So Shashank, the things we just discussed. So which sectors currently you think this framework is fitting in? And on the top of that, the things you mentioned, is there any screeners which you put in, or we need to look for companies? These how exactly these earnings surprises come to your? I hope my question is clear, or shall
Question is clear, Prince. But there's a lot of
तो
echo, I think.
बेसिकली आई जस्ट वांट कि जैसे अर्निंग सरप्राइज आ रहा है कि नहीं आ रहा है, इसके लिए कोई स्क्रीनर है, और यू मैनुअली चेक फॉर कंपनीज एंड देयर फाइनेंशियल्स, हाउ एग्जैक्टली वन कैन गो अबाउट इट?
Yeah, I mean, there is, you can screen for these, but the screener can only do, like 20-30% of the job. So it's a lot of hard work, especially during the result season. You have to, make an habit of going through a lot of results. You can, screen for them, but a lot of time what happens is, by the time it's updated on the screener, they take about a day or so, or, a few hours. By that time, a lot of move would have already happened. So it's not that. So there is a lot of edge in being early. Like I said, if you're early, there is an edge, and to capture that edge, so you have to do the work. So while the screener can give you, maybe on the day one or maybe day two, day three, and all, you can have a look at it. But like I said, the nuances, in terms of whether it is happening across the sector, whether what type of the margin expansion is playing out, what type of a stock it is, and all of that cannot be screened for. So there is an element of qualitative, skill, and a bit of quantitative things which you can do on the using the tools.
In our last conversation, we discussed like staying with the sector leaders is a conservative approach, as in you talked about the moves which mid cap and small cap give are comparatively larger. So in what circumstances shall we go with sector leaders, and in other cases, if a sector as a whole is doing good, so preferably we go for small and mid caps in that sector?
See, in this approach, see, sector leaders was in the context of probably a different discussion. Now, in this approach, you have to see where is the maximum delta. So one of the items I missed out, in my checklist, which probably I should have spoken about is the valuation, right? So valuation is very important because a lot of times the more neglected and the more beaten down the stock is, the more will be your delta. Right. So to give you an example from the recent quarters, right? So stocks like J&K Bank and Karnataka Bank, these are stocks nobody was even looking at, right? Nobody even wanted to look at those stocks. So although an Axis Bank and a Bank of Baroda also came out with very good numbers, you have to judge where the delta is more, right? So the delta is more in the stocks which are more neglected. So here, actually, the opposite of sector leaders will generally work better, because that is where more delta will be there, and that is where more money, will be made.
Right, Prabhakar. So since our last discussion, we talked about capex, capital goods, and infra defense are few sectors. So any changes you see across sectors as far as which fit in the framework which you just discussed, or areas you are hunting within?
Yeah, I mean, so the big winner of this quarter has been PSU banks. right? So they've been undoubtedly the biggest winner. And there are certain other sectors also which are probably in the second, third quarter of their the earnings, which are doing well, right? So some of the the defense names, have also done reasonably well, right? So that is one sector. The eating out sector, those numbers were very good last time around, so the likes of Westlife, Speciality, and some of these chain restaurants, right? So they had extremely good numbers. So that is one more sector. Other than that, what else was there? I think certain smaller pharma companies came out with good numbers, right? So I think those were a few sectors. I think I've put out a list in my recent newsletter also, whereby I've listed out all of these sectors where the earnings have been quite good in the last quarter.
Right. So before coming to Shashank, so the PSU banks is one thing where I get too many questions. So do you think the rally is over in PSU banks, or it can last a little longer from here also?
No, see, it depends on. We've had a good Q1. Now the Q2 from the updates that came in, I think in the first week of January, right? From the updates that came in, Q2 also should be quite decent, because all of them have shown very good growth in advances, right? So I think it'll all depend on the results, right? So the whole beauty of this exercise is that we don't really have to anticipate and think too much in terms of what whether it is done or not. Like I said, you have to follow the basic framework. So from the framework, we are at quarter two now, and like I said, in most cases the rallies stay till quarter three, quarter four, right? So I think there is purely going by the framework, there is some more ways to go, especially for these some of the PSU banks, right? Now, there are certain banks which have really, gone above and beyond, like they've priced in the next 3, 4 quarters. So I think a good check will be to look at banks which are still significantly below the book and have given out good numbers. I think those banks still have some rally left in them, but some shady banks which are already trading at 2 times, 3 times book, is where you'll have to be a little careful, especially the low float ones, right? So I think it's very stock specific thing. But overall, if you ask me, I think there is still more meat, in this trade. And one of the simplest way to sort of figure that out is in this correction, right? It was a pretty brutal correction of 3 days that we saw in December last week, right? It was, although a lot of people in the larger stocks will not have realized it much, but the small and mid caps were beaten out of shape, right? So even in that correction, all of these stocks corrected, and when the bounce came, right, it's a good test of whether they are still relevant or not. When the bounce came, all of these stocks, at least the ones I track, are all back, to the pre-correction levels, or back to the close to the highs. So that tells you that there is still some ways left for these stocks. But I think after this quarter, going into the third quarter is where we'll have to be a bit more careful.
Right. So, Shashank, you can unmute and ask, and our attendees can also send in their speaker requests in case they have any questions. Yes, Shashank.
Yeah, yeah. Thanks, Prabhakar, for the interesting session. I have a quick question on, like, for instance, let's say in this framework, let's say we missed a stock on its earnings, right? And we were not tracking it fundamentally. Is there a methodology do you follow that, a surprise stock that might come into your radar? And like, do you use any technicals to say that, okay, I never looked at this stock, but this looks interesting, and it falls into the framework that you're talking about?
Yeah, all the time, and most of the stocks are like that. Most of the stocks are like that. Like I'll give you an example. Okay, JNK Bank,
Hmm.
right? I've never looked at this stock in the sense that, of course, I know about the stock. I mean, having spent so many years in the market, you will, in a sense, know generally about all the stocks which have been trading, because you would have come across, some news or some event around those stocks. So a cursory, a basic understanding will always be there. But having said that, a deep understanding of something like a J&K Bank, right, was not there, to be very honest, right? And when the numbers are just so amazing in terms of what they have delivered, right? You have to sit back and take a look at it. So then you look at their conference calls, you try to look at what they are projecting, what they're talking about. So but you have to build the position. You cannot wait to build the position, because the stocks will rally non-stop, and that is what happened with J&K Bank also. So you have to believe your framework, and if the market is conducive, right, especially if the market is conducive, you have to take the leap. And like I said, my risk management comes from the allocation, right? I stay diversified with this approach. So my risk management is, okay, I will bet, let us say, 2-3% of the portfolio on this. If it works, it can double, right? If it doesn't work, because the earnings tailwind is there, typically you can get out without any significant damage. So to answer your question, the best stocks are the ones you would not have, really tracked much in the past.
I see. So, like, can we say that, like, for instance, stay active during the earnings session, and see which ones are the ones that are like like moving up quite fast. So there it can be a first filter, and then
Oh, you mean purely technically? Okay, you mean purely technically.
I mean, I'm saying that, for example, like today, a stock comes up with its earnings, right? And it's not on my radar. So for that stock to come on my radar, it has to come somewhere, either through the news or through price change or through some way, right? Like for example, J&K Bank in your case, right? So it might have
Right.
either come through a news or through, let's say, I don't know, WhatsApp, or let's say, you have a, like, a scanner, like a banking stocks, where it say that this stock moved the most today. So in that sense, so is it fair to say that tracking the stocks that move really quite good during the earnings session could be one of the way to catch these?
Okay, to answer your question, how J&K Bank came on my radar, it was so me and my team, we go through, I mean, almost every stock, every result that comes in. It's pure during result season. We are the busiest ever, and we will sit late into the night to ensure that we've seen all the results. Even the very small companies. It's a habit that we go through, and that is how you can. That is an edge I'm saying. So if
Okay.
somebody is willing to put in the work, there is an edge there. Okay. Having said that, uh, to answer your question, one of the screeners, it can definitely happen that something misses, our eye, right? So in that case, what you can do is you can just look at the best performers over a last 1 month period. Okay, look at the top 1% or 2% of the stocks which are the best performers over the last 1 month, and then go back and look at the results of those stocks. So although you might enter a bit late, you might miss the first leg, but definitely you can get an opportunity to enter those stocks. So that's one way you can probably identify what you would have missed during the earnings.
Right. And second question was that, once you, let's say, for example, there is a saying that, buy the rumor, sell the news. So how do you like differentiate, like for example, in these kind of stocks, that whether the earnings that they have just announced is priced in? Is it the only back end is the valuation?
Valuation is one, and like I said, the other is you know the chart, right? So when I said, so I don't track technicals in the sense of indicators and all of that, but if I look at charts, right? So if you look at chart, you should see pre this event, if the stock has gone nowhere, or if the stock has been in a corrective mode, right? That is one of the triggers that, okay, it's a potential candidate, right? And so if the stock is already extended going into the earnings, then you have to avoid such names, right? Extended, when I say extended, not by 15-20%, but if the stock is already up by 50%, 60%, then you cannot jump and post the earnings. But typically, there are two factors. One is valuation. A lot of times these stocks, on the expected, if you sort of, in the expected annual EPS or expected annual profits, they will be trading at single digit Ps, So when you find something like that, you know that, okay, broadly the PE for the Indian universe today is definitely more than 10, right? So 10, 15 is the average PE. So if this company can continue to repeat the numbers that it is doing, and you are prospectively getting it at a single digit PE, then that's again one more trigger for you that there might be money on the table.
Right. Because, the reason why I was asking this is because South India Bank, if you see, it started making noise around like, 7 or 7 point, like, around 7 and 8 rupees. Then eventually, when the earnings came in, the stock moved to 10, or I would say 11, right? So now psychological point of view, it did hit like, like 30-40%, whatever, like from that bottom, if we see. So sometimes what
Right.
happens is that, that the thing that comes into your mind is that whether this news of earning that has just come is already in the price or not. So yeah, I think in that sense, I think one has to understand that, where the bank is, where the cycle is, and then what they are guiding and all that.
Yes, yes. So that is where so if South India Bank standalone came up with those numbers, then I wouldn't take it. Now, because it's a part of a sectoral move, you can have a little bit more confidence in your thesis that this can work. But standalone, I will take even a Karnataka bank or a J&K bank, but I probably wouldn't take South Indian Bank because the numbers were okay. I mean, the numbers were the losses have come down drastically, but I think that started 2-3 quarters back itself, right? It was not a this quarter phenomenon. So you will get at least 100 odd stocks which qualify this kind of a criteria. So I think there is enough to pick and choose. So the candidates where you are like a wishy-washy or you're not sure what exactly it is, you can just let them be and move on to the next one.
Yeah, perfect. Yeah, thank you.
Thanks.
Prabhakar, like if we talk about the insurance sector, so we are seeing strength in that sector. So have you, came across that strength or maybe analyzing that sector?
Which sector, Prince?
Insurance.
I don't see any strength in the insurance sector. In terms of earnings, I don't see any strength yet. In terms of the price, some of the general insurers may be going up, but I don't think it really. I mean, I can't make any sense of it, at least as of now.
Right. And you talked about volumes on first day. So volume is just for confirmation, or just you told like you look for technicals. So you see the moment of how volumes is behaving prior declaration of results.
No. Volume is just a confirmation. The volume just tells you that and the volume, like I said, has to be combined with the price move. If the volume is there but the price action is bad, then you have to relook at the whole thing. So volume is just an added enabler.
Right. So I've received one DM. So that person is asking about the view on the IT sector at this point in time. So going forward, how one should look at the IT sector, or maybe the earning point of view, if you can explain.
Yeah, so IT sector is due for a mean reversion kind of a rally. Okay. But do not expect IT to, especially the mid and small cap IT to go back to the older highs anytime soon, right? So generally, when one sector goes through an earnings explosion cycle, right, and then the earnings starts decelerating, it takes many quarters for the stock to come back because a lot of people get stuck, in the third, fourth, fifth quarter at the peak earnings, peak margins kind of a situation. So IT sector went through that last year where the earnings were stupendous and the stocks rallied like anything. And then, even though the earnings have stayed more or less the same, but like I said, there is no incremental delta for the market to continue to re-rate them. So they've corrected quite a bit now. So I think one should play IT sector only for a, like a mean reversion kind of a bounce. I think they'll be range bound because they've already fallen. I don't expect any more significant falls. But I think expecting them to do something big and go back to the old highs anytime soon, in my personal opinion, is not happening.
Right, great, Prabhakar. So, Prabhakar, the presentation which you gave initially was so much clear that we do not have any cross questions across that, and the few questions which we had from the attendees are taken with you. So, surely the one which you're saying, the Zoom meeting or maybe something on video front, I'll also look for, and I have one person in contact. So that that can be explained in much more better when you present. So I'll get back to you offline on this. Any concluding remarks, Prabhakar, before we wrap up for today?
Yeah, I mean, I would just say that if you, if, so this is a very powerful setup, right? And this setup has been, people have been, consciously or unconsciously trading this setup for many years. Like I said, it worked in the 1800s, and not only in, India did not have a market there, but the US. If you check, this works. If you check in India, it'll work. If you check in the UK, it'll work. So this is something very structural, that a surprise event forces the market to re-rate its views. So it's a very powerful setup. So, if people are willing to put in the time and go through this cycle for 4 5 quarters, then I think they it's a very good way to generate alpha, especially for retail. Sometimes institutions can't do a lot of all this because of the size limitations, right? So we cannot. So like I said, this primarily works very well in the mid and small cap segment, and institutions cannot do a lot of that, right? So, but for a retail investor, I think the opportunity is huge. Like I said, every quarter there are more than 100 such opportunities, right? And if you go back and look at, like I said, look at the past, winners of the last 3 months, and you will find that a lot of them, will qualify for an earnings explosion, or like I said, the anticipation of good earnings. So I would say it's worth your while to spend time on this and understand this. And finally, the idea that I told about having a setup, right, that is more important than anything else. So whatever you're doing in the market, first you try to build one setup and get clarity around that. That what am I trading? What is my setup based on? Is it based on momentum? Is it based on value? It has to be something structural that has worked time and again in the market, right? So, and have clarity around, what is my, allocation, when do I buy, what am I looking for, when will I sell? So if you have that clarity, your entire experience in the market will be much more pleasant in nature. And the second point was the market awareness. Please understand that 50% of the return will be defined by what the underlying market, condition is. So adjust your, expectations to the underlying market and get into the habit of developing awareness about the market, right? So right now we are in some sort of a corrective, phase in the market. So expecting, trying to trade breakouts in this market makes no sense because the breakouts will fail. One or two might work, but most of them will fail. So get into this habit of trying to understand and analyze the market environment, and on top of that, you lay the foundation of your setup, and then go about trading or investing in the market.
So, Prabhakar, is it fair to assume like the maximum holding period in your case would be 4 to 5 quarters? And as we last spoke, you buy at one go, right? So there is no thing of pyramiding sort in your investing style or this setup maybe.
Yeah, as far as this setup is concerned, the maximum holding period will be 4 5 6 quarters at the max, 4 or 5 quarters at the max. But of course, we also do some sort of a core portfolio of sorts, right? Where you invest in what I spoke about earlier, like the sector leaders. So there, that's a different setup. That's a different way of you have to look at it differently, right? So when you're buying an Asian paint, you cannot buy an Asian paint on a momentum. You buy Asian paints during corrections because you know that this company will survive. You know that it has survived multiple cycles. So there you have to actually buy on a correction in those type of stocks, right? So the buy and hold universe has to be very well defined, very well researched, and separately looked at. And that is the universe you buy during times of panic. During times of panic, none of these setups will work, right? The earnings explosion, nothing will work. You know, these will work very well during a good market or a range bound market. In a bear market, like I said, nothing will work. And those are the times, where you have to, look at, because you would have already exited a lot of these, you'll be sitting in cash. And those are the times you have to look at the sector leaders or, the so-called multi-cycle stocks that I call them, so there you hold them for a very, very long time and you let your money compound kind of thing.
And Prabhakar, like as the time progresses, the market matures. So is it fair to assume, like with the progressing time, creating delta would be comparatively difficult as it was in previous times? Market is getting more efficient per se, if not fully efficient.
I don't think so. You see, because the beauty of this setup at least is that every few it's basically a recycling, right? It's a recycling. So the sectors keep changing. So I am sure that 2-3 years down the line, the IT sector will again come out of the dumps, and it will again give you an earnings explosion. So so like I said, this is not a permanent buy and hold. So it is a setup which is a 3-4 quarter kind of a setup, right? So 3-4 quarters, you will have enough, So, like I said, the paper sector probably went through, an explosion in earnings, and now it is, it will probably go sideways or come off the highs and all of that. But after a few years, again, the paper sector will come back. So I think there are more than enough stocks, and a lot of new stocks are coming into the market. So this is a tendency which will keep on happening. So I don't think we'll ever run out of ideas. Like I said, any quarter, and I've been doing this for many quarters, any quarter you will get at least 100 ideas. You can't obviously participate in all the 100, but and not all the 100 will work also, right? So no setup has 100% accuracy, right? So what we are looking for is a 60-70% accuracy, which is also very good. So I think there are more than enough ideas, and I don't think, because it is structural in nature, I don't think it will go out of, it can be, it's like momentum, right? So momentum is one anomaly which has not been arbitraged away. Similarly, a news or a surprise based rallies, right? So this tendency is not going to go away. It's in the nature of the market. Just that it will happen to different stocks at different points in times.
Right. So with this, we close today's session, and thank you so much, Prabhakar, for agreeing to this discussion again. And it was really, really insightful. And for the knowledge of our attendees, this session is recorded and will be available on